Recording, and good morning, everybody. This is Wednesday, August 5th, and this this session is going to last until 9:30 this morning. And we're going to go through our daily disclaimers. And trading for an exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objectives, levels of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. I am not a financial advisor, therefore I cannot give any advice. This live trading room is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during this live session is not a recommendation or suggestion that you should do also the same. Past performance is not indicative of future results, and do not trade money you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies rules for entries, exit targets, and risk management. And having said that, we do have an alert on the Euro or the US yen. And let me go and switch charts here. I'll stop sharing this screen. And if you would, everybody, when you have any questions or answers, put them in the question and answer, use the question and answer tab rather than the chat box, because we're more likely to see those. If you would do that, that would be a help for all of us. And screen sharing. So here's my charts, and here we go. Right now, we had a US yen trade opened up at 6 o'clock this morning. And you can see the way I drew this one, it was a descending wedge. And you can see that it was descending on the 15-minute chart. You can see how the basic trend is descending. Well, we got the alert right here at the yellow dotted line. And we want to try get I usually start with this, I use a triangle tool, and I start with the A and try and get it somewhat descending and sloping down to where our alert was. And I wanted to find a significant point where I can find a anchor, have a hit where this is basically creating a trend line. I try and have an anchor, have a intermediate hit, which is within a pip or two of the line, either reaching it or just short of it, and then to another line, so where I can try and get like a trend line. And then I look for the break on the other side of the trend. And you can see where it broke here. It came right on up. And when I drew the wedge, I drew it so I had a target already set up. And I usually go and I'll look for an area where there's no wicks, where I end up with a wick, and I go up to a body of a candle, and then I go up and look for the next set of wicks. And this is where the area that I chose to look for a target. On the break of that, that was 7 pips. You can see this one's already pretty much done. It's right now, it's back into the wedge. So we'll see what happens here. But it's right back into the wedge. And so here is the break. And so that was at 105.793. And the top of this was right at 10 pips. So there was the ability to get your 7 pips. Brian actually took that before he took off to school today. So he got his 7 pips. And then it came back and it broke. Now, this was what's interesting about this one, is that it broke the trend line, the upper trend line, came up, retested the trend line, broke and retested again. You can see where you have a couple hits before, just before where it broke out, it came back in, and you have another hit right in here. So that's a pretty strong indication that this wedge, that it was possibly going to be breaking to the downside. And you can see where it did. It actually formed a little wedge, and it's on its own right in this area. If you look at the 5-minute chart, you can see where it had like a little bit of a flag, right where it broke in, and then it broke down, and then it broke out and came down all the way to the bottom where we drew this wedge, which is, so right now it's just basing in between this upper trend line of the wedge and the lower trend line. This was a target that I drew from the strong move coming down. Here was the little basing area, and then it came down, tagged this, which was a target that I determined from the little flag pattern that we had way up here in the um, upper part. You can see where this has a nice strong move down, came back up, retested the wedge, broke this trend line, came down, retested it again, came down, and now it's trying to decide whether or not it wants to go break to the upside or break to the downside. So right now, basically both moves are, this one's kind of in play still to the bottom. We just don't know exactly which way it's going to go. And there is a little bit of strength to the dollar still on the, and the dollar and the yen are pretty much right even with, they're fighting for last place is what they're doing. So right now, that was the way we have this one. And that was the last alert that we had. So are there any questions?
Hey, good morning. It's been way too long.
Hey, congratulations, Matt.
Congrats,
Thank
Matt.
you. Thank you for holding up the fort while
Congrats, Matt.
life intervened.
Well, a beautiful intervention.
I'm sure you've been busy.
Yeah. We I didn't sleep very much last night and the night before. It's been we're still at the hospital because he was born at 35 weeks, so it's been a little bit of a challenging time to say the least.
Well, I have Christine and I have Eva backing me up today, so they can help watch the chat room. If you had other things you need to be doing, that'd be fine.
Oh, okay.
So you
We're covered.
we got you covered.
Yeah.
Even if you need a little nap, we're here.
No, that's awesome. I just wanted to pop in and see how things were going. And so you guys getting ready to get into a trade here, or you
Well,
guys?
right, basically this is the U.S. yen. It happened at 6 o'clock this morning. It broke to the upside.
Yeah.
Brian got his 7 pips on this one, came back down into
Nice.
the wedge, formed a little base, came right down, challenged the bottom of the wedge. And so right now it's looking to break out the top again. So we'll see what happens. It's kind of spooling up. I don't know I think right now it's pretty much going to be consolidated. It's going to be hard to get the 7 pips. It's got to get through this to get the 7. And I'm not seeing any strength enough to take the trade on this breakout right now.
No, there's not in my view, what I see here is not enough to take a swing at the bat. You know, you could be sitting in consolidation, right? Which you don't want to be.
It looks like it's right now. It looks like it's making some lower highs and higher lows. It kind of this was a little bit of a head fake right here, and now
Yeah.
it's looking to see if it can break out of the bottom. But right now it's kind of in a channel right now.
I wouldn't be surprised to see another wedge alert on UJ and actually Euro US.
And see, right now we basically have a channel that's been forming between these 2 red lines. It's hitting the top, coming down, hitting the
is
bottom,
probably
hitting the top.
going to make another. Yeah, exactly.
So, and right from where it is right now to the top, it could maybe get your 7 pips. It's going to be close. That's 11 pips again. So this is sloping upwards. So if we do get the break of this wedge on this 1 minute chart, let's get on 1 minute chart here. And so right now it's fighting this this trend line right here, which was the trend line that was drawn from the bottom of this D. Just take it on right here. D came back, hit it, broke it. Now it's retesting the trend line. So you actually have 2 trend lines. You have this upper one, which is where the first target was of the wedge, and we had this one where the second, which was the bottom of the breakout of the wedge. And now it's just coming up and retesting this. So right now we don't have any real clear picture of where it wants to go. And this box right here was we drew from this move from the upside down to here, came on up, and then we put this box pretty much right here in the 1 to 78% retracement of this move, and came right down into the box, which was the bottom of the wedge. And now it's looking to see what it's going to do again. So right now it's kind of in no man's land. It's going to have to pretty much break out of the bottom here before we can take it out further short. And then we're looking all the way down to this area. of where I put my B on this alert, and then this would be a target. But it would have to break out of that. Well, if it does break out of the bottom, then we could be looking at a nice possibility of maybe down here to there's 16 pips. So we could halfway there would be a reasonable target. If you look at the moving averages, not so much on the 1 minute, but on the 15-minute chart, you can see where our 62 moving average on the 15 came right down and bounced right off that. That's right where this target is. So it's consolidating right in here. So I would be holding off on taking this thing long or short at this point until we get a little bit more confirmation of this area right in here. All the moving averages are in the right direction. We had it cross. You see where the 13 moving average has crossed the 62, which is a significant move. But you also want to respect the fact you have all these trend lines, this trend going right down here at the bottom from this point here. And this is where I drew the wedge. And I'm going to connect. This is a 5:15, so this was at 6 o'clock is where the wedge was alerted. This is how I drew this thing. So here's a 6 o'clock alert. I have 3 hits here. So that's a nice solid trend line. We had a little breach right at this point. But then at the top where it was a descending wedge, you can see where this was descending. And I broke out the top of this. So I'm going to use this for the wick, and I'm just come back over here to find out where the other side of my trend line is going to be. So this is where I started to draw it, back in this area, came back down. I looked at this point, I looked at this point, and I looked at this point. And actually, I'm going to try and tuck this one in a little bit closer into here. And then I'm going to see where I can take this B to where it's going to align. And this is pretty much where it aligned. So this is the area. It's kind of getting near the end of where the wedge is. And I said it broke out the top. It tried to punch out the bottom. And right now it's still consolidating. And we just have to wait and see which way it's going to break. But right now I'm looking at the top of this. We have almost like 3 hits. If I take this trend line and duplicate it on the top, put it right up here where the C is, and you can see where I have a little bit of a, here's the, make that the anchor. Use the C for a hit. Here was the hit. And we also know that up above is where we're looking at the next possibility of a target. Once it breaks this red, the top of this red line, it has no place to go other than up to here. So I'm going to draw a little box from, come over here till I find the body of a candle, and I'm going right to here. Oops. Let me draw this again. I'm going to start up with the, for a target. This is where I looked for the target. Come over here. And I'm looking for, as I see from here, I'm looking over to see where there's a body of a candle where there's no wicks, and that's to be the first one. So this was the first target zone right here. And you can see it penetrated. It did break it over here. So this one doesn't count anymore. So now we're going to come up over here and use these wicks. And I'm going to use the top of this red candle, bring it on over. And then this is going to be the next zone I'm looking at this thing to target into. You can see where from this, where it broke the wedge, it came right up into this area, following all the way over here to where it couldn't break the top of this red candle, and then it's running into all these wicks. And actually this was the top of the last wick, and then there's another little zone right above it, which is coming right over here. And that's the area where it's going to have a bounce through. On the downside, we're looking at the area of the B and the D. So we're going to be looking at this area right now. For a target. if we can break this, we have this fib line right here, which is a significant area. You can see where it just came down and bounced right off of that. Now it looks like it's starting to try and break through here again to the downside. And we'll see if we, what do we have here? That's a pretty strong move.
Yeah, especially on a 1-minute chart. It's pretty disproportional to the previous moves. There's no candle within bird's eye view that significant.
And here's the bottom of the wedge. Try and get this thing as close as I can. And we're going to be moving this thing to 2 pips down below. So I'm going to be looking at 73.6. So I'm going 71.6 and move this down to 71.6. And we're going to see if this thing can break and come back up into here. This could be another little head fake. Right now, we can't take the trade because it's a strong move down, but if it bases and comes back up, you could possibly take it for a short. But then we're looking at this as going to be the first target zone right through here. And let's see if we can get our 7 pips. If it comes up from here, you have to get an entry. That's 11 pips, so that's still enough room here. That's a nice big break. I think we can maybe take a sell on this one. Let's wait and see how this candle closes. They have a blue candle. It's got a big wick. I'd like to see it come back up and retest this wedge here a little bit. It's having a little bit of a basing. I'm going to take a shot at this one. There's our target. It's above our yellow line. And let's see if we can get our 7 pips on this one. I was like taking this because even as it had a big wick, it came back up, had a nice little, real small blue candle, and then it came back to the second candle, came back red. So this looks like this thing could come down and retest this. And here's where we had our target here with where the B of the lower part of the wedge was. So it has to get through that area. There's a couple more pips. If it gets anywhere close to your 7, we're looking at 5 to 7 pips. Anything close, anything between 5 and 7, it's a win. It's a little bit more of a push to see where our fib line is. See if there's I believe there was a fib line down there. Right there is a green line, right there by where our target is. Let's see if we get another little push down. And it says some intermediate stops in here. I don't want to see it stop above here. That's part of my stop zone. Let's see if we have any moving averages to follow. Here's a great, nice, our 5-period moving average on the 1 minute. As long as it's going to stay below that, we're good. If this thing starts to hook, we may want to get out and take our profits at where we can. Right now, it's still showing some weakness to the dollar. Or excuse me, showing strength to the dollar, actually. It's got if we look at our Fibonacci, or oops, wrong one. If we look at our RCS tools down here, you can see where the yen is strong by 3, by 6. And so right now there's still favoring the downside. See if we can get to that 7 pip target. We did get the break of the 62 on both the 5-minute and the 15-minute chart. This could be the retest of the wedge. I still think this thing's favoring the downside. So this could just be a pullback. And we'll see where this 5-minute candle closes. I have my stop up above the wedge, so right now the wedge should hold. If this thing breaks, it broke down, coming back in, giving us a little hook. The yen is still stronger of the pair. And right now you can see where this has a nice strong move down. It's getting back, forming a little bit of a flag right in here. Still respecting the top of the wedge or the bottom of the wedge. Here's my zone to enter. And we'll see where this thing goes. So far right now with this wedge, we've had a breakout to the top of the wedge, we've had a breakout to the bottom of the wedge, and we're still at the coming into the apex of the wedge, which is right into this area. If it comes down and if it can't close below the top of the bottom of this blue bar right here, then we're going to be, and I'll probably bail on this This is going to be significant right in here. I want to see this thing come down and break this blue candle. I don't want to see it break the wick of this one. And we wait. We sit on our hands right now. I'd like to see it close. This is actually more of a target bar. This really isn't a stop. This is just more of a reference. And our higher time RSIs are all out of the 40-60 zone. And let's see if we can punch through and take our profit. Had some buyers came in right around this area. You see it came up and it could not close above the yellow. This is on the 1 minute. It couldn't close above it. Penetrated, but it couldn't close. So it's still respecting this area right up in here for a stop loss area. Let's see if we can get our target here. One more little push, only a couple pips away. We did get the close below that blue line that I was telling you about. We have a close below the second one too. So this one, so now we can probably bring our stop zone down into this area. We want to try and hang on to this trade. This got rejected a little bit right there. I'm going to close this one out. I think it still might go to the bottom, but it's having trouble it's finding some buyers in through here. All of our whole moving averages are still red. We still have the strength in favor of the yen. But just finding a little bit of a problem getting through this area. And you can see this is the area right where we put the I believe it's the B that we took. Let me see if I can. There we go. You can see this is the area right here where this pivot came in, went up. So this is the area that's testing. Once it can get through this, we still have this area to get through. So this is the area of significance right in here. You can see it came right down and started bouncing back again. This is on a 15-minute chart, so we still have a lot of, it's still pointing down. Everything's still pointing in the right direction. You just don't want to give up, make a winning trade into a losing trade. And if you look from a higher time frame on this pair, let me put this on a 1 hour chart if I can see that. You can see where it actually started up all the way up here. It flagged. Let me just take all this off right now.
That's awesome, Jay. Jay took 4 pips.
Oh, good job, Jay. And so here's a nice strong move down. this is where I told you about these little flag patterns where you have, here's this flagpole and comes up and it only retraced back about 50%. This was a little bit more of a retracement than I would normally like to see, but the 50% retracement, a lot of times then it's going to come down, and this is still going to be the area that we could be looking at for a target on this. This is about where I'm going to start seeing maybe some more demand coming in. And if you look over to the, like I said, when you now draw these areas, look over to the left and see where the wicks are, where the bodies of the candles are. And if you look on this, this is on a 1 hour chart, you see where this is a new day right here where these are the day breaks. So this was yesterday's high over here, and here was the day before's low. But what you're looking at is you're looking to see if you take I'll take my little horizontal ray, and I go and I see where the wicks are, and you come over here. So you see, if I take it all the way over here, I run into some more wicks. So right here is where the end of this wick. So I went from this area, came all the way over, found a wick, came on down, and that's where when this strong move came up, the sellers came in, they could only bring it down this far, then the buyers took back over all the way up to this area. It took them all the way up here, came down. So this area has been tested a couple times. Once you can break through this area, there's nothing stopping it all the way down. There's a little bit of a wick over wick area right in here. You can see where it came up, wicked up, closed, small wick down, came back, and then took out that. So this is another little zone that we're looking at, that I'd be looking at right here. This is on a little higher time frame chart, but you can use this, as Eva probably can tell you from yesterday with the Euro US, these areas really played out right after I left yesterday, Eva.
Yeah, they were awesome. They worked out. Mind you, I'm still in my original cell because it still hasn't come down to where I got in.
But it broke a broken area where the wicks were, and there was a nice big candle came down and came all the way down to retest the bottom of that. And I can show you that on the Euro US that once we get done with this trade. But anyway, these are how I figure out these areas, and you can see where it came down, and it just couldn't quite penetrate through that. Now it's coming back up to retest where the wedge was. And so let me redraw this again. So we have our reference. Let's see here. There we go, let's try this. We're still waiting on another alert. This one was at 6 o'clock this morning. And I had it was descending, so I'm going to start off with probably this area right here. Come on down to the bottom, take it up to the top where we had a little hit over there, and then we tuck it in as close as we can. And so here's an anchor, a hit before the alert. And these are some violations of this trend line, so I'm going to bring this one over here a little bit closer, see if I can catch something a little bit better. And that looks a little better for, I don't mind one little violation, and then we have a hit here, a hit here, a hit here, and then we have the break. Right now it's coming up to retest the bottom of this wedge. Let's take a look at our lower time frame charts. Let me sync this. And right now it's sort of basing in this area. And this one, if you were able to catch it on this first move down here, you would probably got your 7 pips. Yeah, you got your 7 pips here. If you didn't get in until this area right in here, it was a little bit, you had this red candle came down, formed a little blue candle, and then tried to get in about there, you barely got your 7 pips probably.
That was another thing yesterday we noticed, Al, that everything seems to move in 7 pips. It's actually very geometrical.
Well, and the good news about that is we have a way of finding those 7 pip areas out, and that's with this little tool right here. And you can see that where you have a series of red, green, and blue lines. For those of you who are new to this room, we have a series of red on the U.S. yen. It's a little bit different because they're not quite 7 pips apart, but generally, if like on the Euro US, the yen pair is a little bit different because of the nature of the currency being 100 yen to a dollar. But you can see where from this green to this blue, this one it's almost twice as much. 7 pips, you almost have to go with 2 of these sections. But on the Euro US or the Aussie US, this area right here, they're 7 pips apart from it starts with a blue. We'll start with a blue, a green, a red, then back to a blue. And if you look from this area, and these are all price points. This has nothing to do with price action, just price points. You have basically that's 11 pips, but on the Euro US pair, that'd be 21. And each one of these sections are 7 pips, and that's where we come up with our 7 pip targets from. On the yen, we may have to make an adjustment to the fact that they're less than 7. You need almost 2 of them in order to get your 7 pips.
Excuse me, Al. You have a
Yes.
question?
Yes. Going to go through a list of indicators that you use and how they are used to help with your trades. Yeah. Now's a good time to do over. It's sort of in the middle of no man's land here. So we have a series of indicators. And what I have, let me just start off with the 3 charts. First of all, I have a 15, a 5, and a 1 minute chart. And on each one of these charts, I have a series of moving averages. And you'll see that, let's see, maybe I can unsync this so you can see this a little bit better. On the moving averages, on the 15-minute chart, we have 3 moving averages. One's green, yellow, and orange. The yellow and green are always the green is always a 5 exponential moving average. The yellow on all the charts is always a 13 exponential moving average. And the orange on the 15-minute chart is a 62. So I have a 5, a 13, and a 62 exponential moving average. The green and the yellow are always on all the charts, no matter what time frame. It's always going to be green, it's always going to be yellow, and it's going to be the 5 and the 13. The 62 changes colors once we change time frame. So on the 15, the 62 is orange. On the 5-minute, the 62 is magenta or purple. And on the 1-minute chart, the 62 is a white. So I can just look and see what color the 62 is. I can just instantly know what time frame chart I'm looking at. That's the moving averages that we have. The other tool that we use is the RSI. And we have dueling RSIs. We have 2 RSIs overlaid with each other. And the reason we do that is we have the orange is an 8-period relative strength index, and the blue is a 3-period relative strength index. And I have it ranged between 89 and 11, and then 60 and 40. And I'm looking for the breakout of the 60-40 range with both of them into the direction to go long, to go up to the 89, or to take a short heading down to the 11. And so those are the indicators there. And this one is the RCS. This is our own proprietary indicator that we use, and we're very close to making this available. We just have to work out a few more details with the developers on this. But this is what I call my Magellan. This gives me the strength of what the currencies are with each other. And we have and I'll show you so like right now, this is the what I call our Magellan. This top one is a 1 a 4-hour chart. Here's a 1-hour chart. Here's a 15, and here's a 5. And what we do is we have 8 currency pairs, and we're showing the strength of each one compared to the other on certain time frames. Now you can see, like right now on the 4-hour chart, the Aussie is the strongest, the dollar is the weakest. Well, you can see that the Aussie is the strongest on the 1-hour chart, dollar is still the weakest. So if I were to be trading the Aussie against the US, I'd be going with the favor of the direction of the strength of the Aussie, because that's the strongest strength of the currencies. And you can see here, is over here on the 15-minute, the Aussie is still stronger than the US. But of the 8 pairs, it tells you what place they are in the strength reference to the other 7 pairs. And if you look at our Euro-US chart, and we just have just the symbols of just the 2, but I can see, like on this 15-minute chart, the yen is the third. It starts with 0, 1, and 2. So the yen is the third weakest, third is the third strongest, but it's only one. Actually, right now it's two positions stronger than the dollar. So right now, if we were to be as trading this, we'd be trading this in favor of the dollar, or excuse me, in favor of the yen being stronger. But I'd like to see at least 3 points stronger between the symbols that we're using on this pair. So in other words, with the fact that this is a US Japanese yen pair, and the yen is the stronger of the 2, I'd be looking at favoring the yen, being the yen's the second currency of the pair. If the yen is stronger, that means we're looking for it to go short with the yen strength, which means basically the dollar is getting weaker. And last but not least, the other indicator that we have, and again, we're trying to package this whole deal for everybody. And this is our Fibonacci. This is not a standard Fibonacci like everybody thinks of, but it's Fibonacci on the clock reference to price points, not by price action. These points are the same on every pair at the same points. And it just shows us where these ranges are. You'll see where it'll base amongst, like a lot of times you'll see where it'll hang around one of these lines. And then once it breaks, it goes up to, it usually tries to go to the next line. You can see where it was basing here, came down to the green line, bounced, came back up, bounced here. And now it's looking at, once it confirms its direction, it'll probably bounce right off of this area. And you can see this is right where my target zone is. And
Alan's asking about the Hall indicator, Al.
Oh, the Hall indicator. Oh, the Hall indicator. The Hall indicator. That's we've coupled that with this RSI. We've overlaid the Hall, and this has you'll see I have 2 lines here. Well, no, this one on the 15-minute. This is a 15-minute Hall moving average, and that just shows you where the strength of, it's like a moving average. It's just, it changes colors when it goes from a long to a short, and we have that on all 3 time frames. And we have the 15-minute on top of the 5-minute on the 5-minute chart, and then we have the 15, the 5, and the 1-minute all together. And when you see when these are all red, that's that's usually a good sign. And if these are all red, and these are coming out of the 40-60 zone, that's a good period of time to usually try and take it short. And so we're just looking at all 3 time frames with the whole on the 3 different charts. 15, just the 1, the 5 and 15 on the 5-minute chart, and the 15, 5, and 1 minute on the 1-minute chart. And those are all the indicators we use, and we have them bundled up together so that basically, if you have TradingView and you have the free version of TradingView, you'll be able to get basically probably as many as 4 moving averages all bundled with one. The Fibonacci plotter is 1. That'd be 2 indicators. This one you have 2 RSIs and the whole moving average all bundled together. That's like 3 indicators. And so if you have the free version of TradingView, you'll get pretty much like 7 or 8 indicators that you can put on without having to upgrade your trading view. Plus, it makes it easier to get everything set up. It's just easier to work with. But we're going to be making that available for a nominal fee as an add-on package is what we're looking at to your AIRIS AIRIS subscription. And it should be relatively affordable. I guess that's a relative term, but that's.
Excuse me, Al?
Yes.
Yeah, Alan wanted to know if those indicators are going to be grouped for the Hawkeye part of a bundle, or if not, when is it part of the AP IRIS?
It will be bundled with the AP IRIS. It'll be done through Auvoria Prime. Auvoria Prime is working on a agreement with developers, and then Auvoria Prime will be doing pretty much collecting the fees with a subscription, and then they'll be compensating the developers through that way. That's what we're looking at doing. So it'll be just you'll get IRIS, and then you'll have the option to buy the indicator package. Is what we're looking at, and you'll get all the FRP, the moving averages, the relative strength, and the RCS tool all bundled as one package for one price. And we'll make it to be and I expect it's going to be a very fair price for a very good deal. Now the indicators that you can get the RSIs for free. You can get the moving averages for free on TradingView, but you can't get them bundled unless you have unless someone knows how to program that. The RCS tool is strictly that one is proprietary. The Fibonacci price plotter, that's proprietary, and that one you're not going to find on TradingView other than through the developer. But it's really nice when you can have your moving averages, and when you change charts, you can see, like, even if I change the chart on this 5-minute chart, if I make this a 15-minute chart, you'll see that this moving average will turn orange. So if I go from, right now it's on 5-minute, as soon as I go to a 15-minute chart, you see now that changed orange. The other two colors, the green and the yellow, stayed the same. But that way, when you switch back and forth to your charts, your 62 moving averages will change back with it. Right now, this thing's sort of in just a limbo area. I'm pretty much done trading this one for right now. I'm not seeing any real strong moves with it. This thing could go and tank another 100 pips for all we know. But for right now, I'd say this thing is, we're still waiting, and still hasn't come down to retest this area where we had the B. Or this, yeah, this is where we had the, actually, I think I took it all off, didn't I? Oh, no, here it is. I can put this, resync this. There, now we got all the charts again. It is trying to break down. But the yen it's just not, it's still kind of fighting this. I said right now the yen and the US dollar are kind of fighting for last place. I'd like to see a little bit more of a spread on that before I take it, continue with this move. Any other questions?
I wonder if anybody has a pair that they would like us to maybe have a look at.
No, that's a good idea. Anybody have a particular pair that you want to take a look at? We do have some announcements, a couple of red folders. This is at 10 o'clock. We need to pay attention to this. At 10 o'clock today, there's a red folder US and a red folder New Zealand at 11. The crude oil report, inventory reports at 10:30. Be very careful trading the US CAD when that report comes out. And then we have a non-manufacturing PMI coming out. That's a red folder. Those are all areas that you'll see some volatility oftentimes with the US dollar. So you may want to just kind of watch those pairs, or if you're in a trade with the US dollar, you may want to try to exit before the news announcement, because you will get some volatility before and after those announcements. Here's the US dollar that we had earlier. That was yesterday. Let me move this to a different chart and see if we can get a US dollar chart up here. Oops. Euro US. Take some of these off here. See if anything is developing here. The fact that we were saying that when we were looking at this RCS tool, we were showing that the dollar is the weakest. So if you're looking at, say you want to be looking at, say, like the Euro US pair, you would be wanting to trade to the strength of the euro, because the dollar is the weakest on all 4 time frames. The dollar is the weakest, so you don't want to be trading in favor into the strength of the dollar because it's not there. So if we look at the Euro US chart, that's one nice thing about this tool. That tool is that even if you don't have an alert, you can oftentimes find areas where you may be able to take a trade or find your own wedge that's not being accounted for by the software. Although the wedges that are alerted by the software are generally work out pretty well. But if you're looking at like a Euro US, these red zones. Yes. Oh, what's that?
Alan's asked a question here, Al. Do you only trade the pairs in the RCS once IRIS sends out a signal alert?
I favor these IRIS alert signals. Those are usually the best ones. As you trade wedges, you'll start seeing wedges on your own without the alerts. But there's something about the algorithm that the IRIS is looking at before it alerts you to it. So it's looking back at some other price action to determine whether or not to send an alert. And I'm not sure I don't know what the criteria is that is or isn't. But I will favor the IRIS alerts over my own. If I'm sitting here, like yesterday was a good example. We had an alert at 2 o'clock in the morning, and there was not another alert until sometime about 1:30 or 2 o'clock in the afternoon. So during that whole period of time is that you could either just say, I'm just not trading until I get an alert, or as I'm sitting here trying to figure out why I couldn't get everybody in the room here yesterday, and I apologize for that. That was my error that I didn't. You don't know what you don't know. I found out what I didn't know, so hopefully that won't happen again. But I do apologize. It wasn't anything that you folks did. It was something on my end here that wasn't working. So, but having said that, I'm looking to see where I can see where I may want to, like I said, with the Euro US, the dollar is the weakest of the pair. So in this case, I'd be looking to go long, and I'd be looking to see if I could find something that would give me an indication that maybe there's a wedge developing somewhere. And you can see, if you look at this nice big move up here, you can see that you had a wedge right in this area. Take this up to a high point. AC, and there's a little bit of a wedge right in there. You can see where it kind of broke out. If I can draw this here, it's a little tight on this 15-minute. You had another little wedge right in this area. But as you're seeing, like right now, I'm looking at this right now. Even though we don't have an alert, I would be looking at this move right up in here. So I would be looking. I'd be looking at something of this nature from here to here. I flatten this out a little bit, just a little bit slightly upward. And I flatten this out, and I'd be looking to see if there's something that would give me some indication it's going to break out to the upside. I may slide this down a little bit here, put this on a 5-minute chart. Let's see if I can find where it has like a pivot high, a low. Should be probably right about in this area right here. You have a little sloping down. So we have I'd make a C there, and I'd bring this down, to bring that flat up, and I'd sort of tuck this one down and form something that would give me an idea that maybe this thing may break out to the upside. Again, with the euro being the stronger, I'd be looking at to break to the upside, and I might take it like to here, flatten that out, and then my target would be up on this area. But right now, there's not enough room here to really take this. But that's why it's one reason why there's probably not an alert. But that would be some of the things you can do with that tool, is trying to find some wedges that may not be alerted. You're better off in just waiting just for the alerts. But this tool, it gives you the idea where the strength is of the overall markets between all the different currencies. Any other questions? And we have about 4 more minutes for, let's take a 5-minute break and see, come back at 9 o'clock, and we'll see if we can find if an alert comes into play. A lot of times if we take a break, we'll get an alert. We only have about another half an hour left of a session. So let's take a little bit of a break, grab a cup of coffee, and be back here by 9 o'clock. We'll see if we get an alert at 9 o'clock.